All right, we're going to break down one of the wildest market opens of the year. This is the story of how a single social media post, in literally 5 minutes, completely flipped the entire global market on its head. So let's get right into what happened this morning.
So just as everyone's getting their coffee, this bombshell drops from Iran's official news agency. A flat-out, direct denial that just set the stage for total chaos. But you have to ask yourself, what exactly were they denying?
Here's the setup. At 7 a.m. sharp, a post from Donald Trump hits, announcing a 5-day pause on strikes, talking about very good and productive conversations. Okay, then just 5 minutes later, Iran's Fars news agency comes out and explicitly denies any contact whatsoever. So now you've got the market staring at two completely opposite stories at the exact same time. Total contradiction.
So what happens next? How did the market react? Well, it chose to believe the social media post, not the official government denial. Think about how wild that is. And that one decision sparked a complete, violent reversal of everything that worked last week. Let's look at the numbers.
I mean, this slide just says it all, doesn't it? Last week was a pure stagflation trade. Energy stocks like Exxon were hitting all-time highs, the S&P was bleeding out, down almost 3%, and tech stocks like Micron were getting absolutely crushed. This morning, it's the complete opposite, a total inversion. Tech is now the leader, screaming higher, and energy is getting hammered.
And when I say hammered, I mean it. Oil didn't just dip a little bit, it completely fell off a cliff. A $7.50 drop in Brent crude. That's the single largest one-day fall since this whole war began. It's just a massive, deflationary shockwave hitting the system.
And here's the other side of that coin. That massive plunge in oil sent stock futures soaring. I mean, look at this. The S&P, the Dow, the NASDAQ, everything gapping up over 2% on this de-escalation hope. So if you were perfectly positioned for last week's market, what on earth is your first move at the open?
Okay, that brings us to the playbook, executing the flip. In moments like these, you can't hesitate. You need speed and absolute conviction. And your first move, the most important move of the entire day, is getting out of the trade that just went from a winner to a total disaster overnight.
So think about this. On Friday, the SPY 648 put was the golden ticket. It closed perfectly at the money. But with the S&P gapping up 2.4%, that means SPY is going to open way up around $663. That means your beautiful put option goes from maximum value to almost worthless, instantly. The only play you have is to hit the sell button the second the market opens to salvage whatever premium is left. All right, so you've dumped those puts, hopefully for a profit. What's next? You follow the money. And on a de-escalation day like this one, all that capital is flowing like a river away from energy and straight into the market's new favorite sector, technology. So the strategy here is really a two-part move. First, you make a tactical reduction in your energy positions. You're not selling everything, but you are closing out half of your riskiest, short-dated calls in names like Exxon. Then, you immediately put that cash back to work in tech, opening new calls in leaders like Palantir and repositioning your Micron trade for the rally.
And let's be super clear about what we mean by tactical reduction. This is not about abandoning the energy trade completely. It's smart risk management. Remember, this is just a 5-day pause, and Iran has already denied it even happened. So you hang on to your longer-dated calls because the core idea that this war is far from over is still very much intact. You're just trimming the sails to navigate today's storm.
But this brings up a really important question, right? Why on earth does a potential pause in a Middle East conflict cause a tech company like Palantir to suddenly rip higher? The connection might not seem obvious, but the logic is pure macro.
Okay, here's how it works. It's a chain reaction. That huge drop in oil immediately calms down fears about inflation. And when inflation fears go down, the market starts betting that the Federal Reserve might just cut interest rates sooner than expected. And lower interest rates, that is pure rocket fuel for tech stocks because it makes all of their future profits worth more in today's dollars, it lets their valuations expand.
So yeah, it's a really powerful narrative that's driving this rally. But, and this is a huge but, we have to remember this whole thing is built on an incredibly fragile foundation. It's basically a house of cards.
The entire rally is built on this one number, 5. That's it. This isn't a peace treaty, folks. It's a conditional 5-day window based on a single social media post that has already been denied by the other side.
So the big takeaway here, the thing you have to keep in mind, is that the headline risk is just enormous. You've got Iran on the record saying this never happened. The pause itself is conditional. Any headline, any tweet,
Any statement that contradicts the narrative could cause this entire rally to unravel just as fast as it started.
Which really leaves us with this one final thought, a direct quote from the source material that sums it all up. This entire massive market reversal is built on one single Truth Social post. So you can trade it tactically, you have to manage your risk, but whatever you do not go full-size bullish. The ground underneath this rally is not solid at all.